Hello and welcome. Great to have your company on Kalkine TV. I'm Holly and you're watching The Buzzing Trends. In today's show, we'll be looking at those 7 ASX-listed stocks you'll want to explore as lockdown eases, including Flight Centre, Transurban and Apollo Tourism and Leisure. Join us to dissect their businesses' fundamentals and gauge their performances before we zoom our lens on over to stocks like Cochlear, CSL, Seek and People Infrastructure. So to kick it off, as several ASX-listed companies across different sectors have felt the pinch owing to months of coronavirus pandemic-induced restrictions. The worst hit companies were those that belong to events, tourism, aviation sector as well. Apparently, with restrictions easing, the corporate sector is expecting a rebound soon, coming back to pre-pandemic levels. On that note, it's time to check out 7 ASX-listed stocks to explore as lockdown eases. Well, the first company on our radar today is Flight Centre Travel Group, listed on the ASX as FLT. The Australian travel agency Flight Centre is targeting a return to monthly profitability after months of border closures. The company expects both corporate and leisure vertical to see higher volumes in the financial year 22, leading to a broader recovery for the company. Flight Centre has a reason to expect such a recovery, as previously it had also experienced strong and immediate rebounds after travel restrictions were lifted. However, in order to get a break even, Flight Centre would need to generate nearly half of its pre-COVID total transaction value. The share price of Flight Centre is trading lower during the opening trade at $17.99. Moving on now to the next company on our list, Transurban Group, listed on the ASX as TCL. A developer of the urban toll road networks in Australia and the United States of America, Transurban was impacted as traffic volumes across Australia nosedived in the wake of restrictions imposed during lockdown. However, experts say that the traffic may recover once trading conditions normalise. And as vaccination rates reach 70% of the population, easing of restrictions is expected to boost the performance of Transurban Group. In financial year 21, Transurban Group's EBITDA fell 3.3% in comparison to the previous fiscal year. The revenue, on the other hand, declined by 0.3% year on year, as Transurban's board announced a total dividend of 31.5 cents over financial year 21, keeping the shareholders' interest at the front. The share price of Transurban was trading higher during the opening trades at $13.85. And the next company on our list is Apollo Tourism and Leisure, which trades on the ASX as ATL. The recreational vehicle rental company Apollo reported a net loss after tax of $17.9 million in the financial year 21, which is a clear improvement compared to last year's $61.2 million in losses. Apparently, Apollo's reduced loss came in the wake of its increased activities despite border closures due to the pandemic. CEO and Managing Director Luke Trouchet described it as the light at the end of the tunnel, as COVID-related restrictions begin to ease in the company's key international markets, such as Canada and Europe. The CEO is of the view that the company is well positioned to capitalize on recovery in tourism activity. However, revenue fell 20% in the full year, mainly due to border closures. The share price of Apollo Tourism was trading flat during the opening trade at 44 cents. Well, it's time now for a short break, but stay tuned because I'll be right back with more detailed info on Cochlear, CSL, Seek and People Infrastructure.
Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the Crypto Buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV.
Welcome back, Holly this side, and we now move on to the second and final segment. Let's check out the rest of the stocks featuring on our list today. First up, we've got Cochlear, which trades on the ASX with the ticker COH. A provider of implantable hearing solutions, Cochlear reported strong sales revenue in financial year 21 due to rescheduled surgeries from COVID shutdowns. With the easing of these shutdowns, the company is expected to gain as earlier postponed surgeries will be rescheduled. And in financial year 21, sales revenue rose 10% as the company implant units jumped 15% to just over 36,000 units. Apparently, the underlying net profit was up 54% from financial year 2020, and the company also boosted its dividend by 59% compared to that of the previous financial year, representing a payout as high as 71% of the underlying net profit. The share price of Cochlear was trading lower during the opening trade at $228.10. Moving on now, the next company is CSL, who trades on the ticker as CSL. The healthcare company reported strong earnings in financial year 2021, outperforming its guidance for the period, and they're expected to do as well as the coronavirus lockdown eases, along with an increase in demand for vaccines. During the pandemic, the company manufactured 50 million doses of the AstraZeneca vaccine for the Australian government. To talk about its major highlights of the overall performance in financial year 21, its total revenue increased 9.6% in constant currency, while the gross profit surged 9% as well. On the other hand, the net profit after tax was up 10% compared to guidance of 3% to 8% in growth. CSL share owners received a full-year dividend of $2.22 US a share, which rose 10% year on year. In the financial year 22 guidance, the company said the net profit would fall 2.5% to 6.8% in constant currency, or 5% to 9% on reported profits. The share price of the company was trading lower during the opening trades at $300.87. Moving on now to the next company on our list, SEEK, which trades on the ASX under the ticker code SEK. Well, with the easing of lockdown, employment services are expected to get a boost as more people will step out of homes in search of new jobs. Even companies are expected to increase their production, and this would require more manpower. SEEK provides online employment services, advertises jobs, banners, and candidates' curriculum vitae services. Meanwhile, they announced a 1% revenue rise in financial year 21 from the corresponding period last year, although the company's net profit after tax was up 58%. SEEK also reported record volumes in the second half of the year, easing the COVID-19 restrictions, as the share price of SEEK was trading lower during the opening trade at $31.37. And last on our list today is People Infrastructure, listed on the ASX as PPE, which is another recruitment firm expected to do well. The workforce management and staffing company provides solutions to cater to workforce challenges faced by businesses. In financial year 21, People Infrastructure reported strong growth, while revenue rose 19%, EBITDA surged 33%. And apparently, underlying net PAT and amortization climbed 37% as well. Some of the companies acquired by People Infrastructure during the period were eCourier and Illuminate, Swing Shift and Techforce, and Vision Surveys. Shares of People Infrastructure was trading lower during the opening trades at $3.87. Well, with that, it's time to wrap up today's show, but I hope you found it informative. Stay tuned for more news and updates on Kalkine TV Live. Holly Shields signing off.